Hi, welcome to this video. In this video, we will be talking about financial modeling. Essentially, be looking at the fundamentals of uh, financial modeling. As most of you already know, there are different types of modeling within the finance world. Um, the most common ones, of course, are the three statement um, modeling, discounted cash flow, and then of course the leveraged buyout model. There are other models, but for the purpose of this video, we will just focus on some of the fundamental elements of modeling three statement model. So, generally, people ask what kinds of skills, what kinds of competencies you need to have to be able to undertake financial modeling. Um, I usually advise people that based on the requirements, especially of the Corporate Finance Institute's Financial Modeling and Valuation Analyst certification, um, which I hold, it is important for everyone seeking to be um, a financial modeling specialist to generally have some accounting principles, understanding of accounting principles, and of course some basic skills in Excel. We're looking at basic things like pivot tables, functions. You know, you should some general skills in data analysis in Excel. Um, these five key skills that I'm touching on. Accounting principles, basic skills in Excel, data analysis. Um, on top of all of this would be capacity to undertake forecasting. Should be able to do basic things like forecasting loans, payments, interest, undertake quantitative analysis, sensitivity analysis, and so on and so forth. And then the final skill, of course, would be to have a very good skill, make your reports clean and easy to understand those that will be using them. All right. For today's task, we want to look at you know uh, some simple elements, skills, and financial modeling, and we will be using this spreadsheet. As you can see, we have some data, some information there, and what essentially we want to look at. Financial modeling is really all about forecasting and predicting what can happen in different scenarios. So we will look at, for instance, what has happened in this quarter in terms of sales, and prepare a very simple income statement and look at what can change, holding other factors constant and other factors varying. So if we look at what we have here, it's easy to tell that the revenue, of course, will be the quantity sold, quantity of fuel, and then the price per liter, right? Right. So we have 200,000 Ghana cedi represented there. Now we want to look at different scenarios, which leadership can come in so well. If we are making a revenue of 200,000, how many, how many, liters? How many liters do we need to sell or to make a profit, a total revenue of say 500,000? And then there could be other questions about um, um, if we calculate our profit, what can we do to raise the profit to a specific margin? or yeah, things like that. So it's also possible that leadership or management may ask that, okay, we are selling our fuel at 14.5, and there are other competitors that are probably around 14.2. So if we were to reduce our prices probably to 13.8, 13.9, um, how much liters of fuel do we need to sell for us to be able to hit certain benchmarks, certain profit margins, certain revenue uh, margins. So that is what we'll be looking at. So very quickly, we want to um, create a very simple model, and yeah, you can practice understanding and see. We have here. Let's just copy and put this here. So we want to calculate revenue. We want revenue, calculate profit that has been made so far. Now we want to start first of all um, with the revenue. We already know that the very revenue, as we looked at earlier, quantity sold times the price per liter. Great. Now, now if our bosses, if senior management were to ask that, okay, how much quantity of fuel do we need to sell to hit a profit of about 450,000? Okay, you could decide to go in here and begin to type 25,000 liters until, I mean, that is not an efficient way to arrive at the solution. An easier way to do this would be to, you know, come in here, revenue has been calculated, and then you go to data, and then you look for what if analysis and select goal set. Now, when you select goal set, this basically means is that we want to set a goal, a certain specific figure by changing a certain quantity of material that we are selling. Okay, so in this case, we want to change this revenue, which is 20. Okay, we want to set it to 450,000, which is the target that leadership wants to know about. Okay, and we want to do this by changing what? The quantity. So Excel is automatically going to tell us how much liters of fuel we need to sell to hit that particular. Uh, so what do we get? This is what Excel gives us. And what we need to sell a little over 31,000 liters of fuel at the same price for us to be able to reach what? A revenue mark of 450,000. Now this is written in so many decimal points, so we would like to round this up. This round, okay, round up. Better to use only this. So we have 31,035 euro to give us the revenue mark that our leaders are asking of us. Now we want to calculate the profit. We need to know our revenue. We need to know our fixed costs, our variable costs, and all of that, so that we can arrive at what our earnings before interest and tax, our profit. So here we are going to do the revenue. We already have the revenue figure here, but never mind, we can still calculate it. So yeah, now let's calculate the new revenue here. That'll be this times 1. The price per liter should be over here. We have this as our revenue. Let me leave some space in here. Okay. Then we have fixed costs. Yeah. This is our fixed cost. I think that is already have that figure provided. Great. And then we have our variable cost. That'll be, we have the cost per liter in terms of the variable cost. So we need to multiply that by the quantity as well. So we have 9.32 times our total quantity sold, give us the variable cost. And then down here will give us our profit. And our profit will be what? Revenue minus what? Our first cost minus our variable cost. Okay, great. Now, of course, this should show like the one number because we're dealing with currencies here. So I would like to use a number here as well. Control 1. Come to number. Use separated. You may or may not leave any decimal numbers, but it's fine if you choose to. So yeah, this is what we have for that. So now the question is, we have our profit. Management wants to know that in next quarter, if we do want to hit a profit of 250,000, okay, how many liters of fuel do we need to sell to be able to hit that? But we're going to use the same process that we did earlier. We're going to come to profit here. We go to data. We go to what if analysis, goal 6. And again, we want to set this to what? 250,000. Now we're setting the profit, not the revenue, right? And we want to do that by changing the quantity. Okay. Do it. But you're going to notice that it's going to give us what? An error message. Okay, cell must contain a value. Why are we getting this response? Simply because over here there is a formula. Okay, so the way to go about that is to copy the part, the figure over there, copy it, and then paste as value. Okay, it's a number, and then that problem will solve. So let's get back to goal 6. We want to set these again to 250,000 by changing it. Now we have new figures popping up. Excel is extremely powerful in giving us these types of forecasting. So we see that now this has changed to nearly 50,000 liters, which will give us a revenue of nearly 724,000. See this, and then we'll be able to get this profit. So once you have this, again, you want to use the round up because it doesn't look so in that format. Oh, I left it. Yeah. You want to make sure you run everything up beautifully. Great. So this is what we have now. But let's assume that our oil marketing company, let's say Defcon Oil Marketing, we are selling at 14.5, and our competitor X is selling at 14.2. Okay, so management is asking you, the data analyst, asking you, the financial modeling expert, to tell them that when you do the model, when you set up the model, how much, what price do we need to set and what quantity do we need to sell for us to be able to hit the same profit? Okay, or let's say to hit a profit of 300,000. And in this case, management wants us to make sure that our price per liter doesn't go beyond 13.99. Okay, mind you, the current price is 14.5. Now the competitor price, I'm just going to write down here, our price per liter equals what? Competitor price per liter is what? And our desired price per liter that has been given by management is 30. Right. So we have this over here. Of course, I don't expect you to do this in your model, but I'm just using it for demonstration. Great. So to do this, we are not going to be able to use goal-seek because goal-seek only gives us a forecast, a prediction by changing one metric. Okay, it changes one variable to be able to predict or forecast other variables. But we need to use something else called solver, which is also a very powerful tool in Excel, which will help us to be able to change multiple things. Mind you, here we want to make sure that what we need to work on our price per liter by keeping it constant at 13.99, and then we need to also see how many fuel we need to sell to be able to hit a profit of 300,000. Okay, great. So for us to be able to do this, we need to go to data and we need to use solver. Some of you may not see solver on your Excel when you go to data because it's not always originally there unless you make it possible for it to show. The way to do that is to go to File. You go to File, you go to Options, you go to Add-ins, and this should bring up this dialog box, this page. And then you just go to what Excel add-ins down here, Manage. Then you go and you will see Solver down here. I've already selected it. If you don't have it selected, you select it and then you click on Order. Okay. All right. Once you do that, you come back to Data, the Data tab, and you should see Solver open. Now let me show you how to set up Solver. So you open Solver. Set all. Okay. So the way to work on this. Now, what is the objective? Okay. Right. So here we want to make sure that we set our objective. And our objective is what? Our profit, isn't it? And we are trying to make sure we've been giving a specific value by management. And that value is 300,000. Okay. And we want to hit profit margin by changing both the quantity, okay, and the price per liter. But we have been given a condition of management. What condition is that? So you see this box over here, subject to the following constraints, right? We need to add a constraint, and the constraint is that our price per liter should not be more than 13.99. Right, so it should be less or equal to 13.99. So we need to add it. Don't click on OK. You click Add and then you close this button, and then this comes back. All right. Now once this comes back, we need to click on Solve. And Excel worked on everything for us. Everything has changed, hasn't it? So you see our profit has gone to 300,000. Everything else has changed. Excel works everything out and says, well, yes, it is possible to sell at 13.99 to get a profit of 300,000, but that will require you selling 66,000 plus liters of fuel, which will generate nearly $1 billion, in revenue. So this is the kind of thing that Excel do when you are doing financial modeling and you are setting up the three-statement model. Here we've already looked at the income statement. You could use it to do so many things. Let me mention that there are situations where you want to predict what will happen when several variables are affected or changed at a certain time, in which case we would not be able to use the solver. In situations like that, we would use another tool called sensitivity analysis, and that is something that we'll not cover in this video. But if you do want to, get more information or to learn how to do other complex, things in financial modeling using Excel, you can reach out DevCon Analytics, and we can set up one-on-one coaching sessions over the week. Those of you that are on the Slack page, you can drop a message if this is something that you are interested in. Those on the Telegram page, you can also share if you want one-on-one coaching to master financial modeling using Excel, especially doing higher order things like sensitivity analysis and all that. We also cover Monte Carlo simulation for those who may be interested. For those that are dealing more in the risk environment, do financial modeling, you want to show that where variables are not particularly constant, we need to account for all the possibilities. So we use Monte Carlo simulation to do that. If you want to learn all of that, you can also get in touch. And, we can discuss. So this is just a brief one to bring you up to speed on some of these skills that are necessary in financial modeling. So I'll see you in the next video.